Welcome to Medium of Exchange, the podcast where we spotlight business owners building on a Bitcoin standard. Each week, we'll share real stories, practical insights, and why this monetary shift matters more than ever. This week's a little different, though. We've got some feedback from one of our listeners, which, by the way, guys, please give us feedback. It's super helpful. And this listener was requesting visuals, charts, and to talk specifically about volatility. Jack, you want to talk about volatility today?
Hell yeah. I mean, volatility, that's what gets the juices flowing, right? That's what keeps you excited.
So at my payments company, the Bitcoin Payments Advisor, we talk about accepting a form of money that stores value over time and saving in a form of money that stores value over time, aka treasury management in businesses. And I think sometimes folks will ask, I can't really accept a form of money that can drop 30% in a day. Jack, what do you think? Is Bitcoin too volatile?
I think I'll get into it a little bit deeper as we get into the episode, but it depends on how you define volatile, and definitions and words are important to, become clear of what you're actually talking about. Because in terms of like nominal US dollar price, I can see why that's a barrier to entry for people. But when I look at Bitcoin and its volatility, I actually view it as one of the lower volatile things that I'm exposed to.
So that's great. Okay, so we're going to focus on three things today. Number one, what is Bitcoin? Number two, which Jack will share about price discovery. Number three, log charts. And this will be the visual component that our listener was requesting. So I'm going to go over the first section first. What is Bitcoin? Bitcoin is money. Jack and I view Bitcoin as money, not necessarily as a speculative asset. So we can talk about a couple different forms of money. One, a debt-based government-issued form of money called Fiat. In my country, those are US dollars. The second is a fixed supply, decentralized global internet form of money, also known as Bitcoin. And from a volatility standpoint, what is the difference? Well, Fiat guarantees that you'll basically lose 5, 10, 15% every year to inflation. And Bitcoin offers volatility with exponential upside. And volatility over time, as we've seen, is decreasing. But for me, one of the really big aha moments when I began to see Bitcoin as money. And when you invert your thinking and see the world through the lens of Bitcoin, and the cost of living begins to go down. It's the opposite of inflation. When you denominate in Bitcoin, the price of everything is going down. Jack, have you noticed this where you're like, have you looked at like eggs, energy, housing, and denominated, priced it in Bitcoin?
Yeah, I mean, once you start to put on those orange colored glasses, you really can't stop seeing things priced in Bitcoin. It's really interesting, too, that you use the word inversion, because I know we were both taking notes before this, and I literally wrote the same thing. I said Bitcoin requires you to invert your thinking and change your perspective on everything. So exactly what you said there. Like, you just start thinking in opposites, but you realize that those opposites often lead to more positives.
So I'll give you guys a very specific example on the inversion topic here. I bought my first house in 2012 for $186,000. And obviously the default is to denominate in fiat or dollars. And I met this real estate guy once, and I mentioned how the price of real estate is falling when you denominate in Bitcoin. He was like, I disagree. And I didn't really know how to respond to him, because it's not in my opinion, it's just fact. I don't know that he really understood what I meant when I said pricing real estate in Bitcoin, but my property has appreciated from $186,000 to $700,000 today. So, like on paper, that's an incredible win, right? Most people see that and say, wow, you crushed it. This, though, is where Bitcoin like massively changed my perspective. In 2012, Bitcoin was $12, which means that when you denominate in Bitcoin, it would cost 15,000 Bitcoin to buy that house. Fast forward to today, it's worth $700,000 in fiat, but in Bitcoin terms, it's worth 6 Bitcoin. So even though I won in dollars, guess how much value I lost when denominating Bitcoin, Jeff?
I mean, like
percentage
basically 100%.
Yes, 99.9% 99.9%. So that's the silent lesson of like fiat is it tricks you into thinking that you're winning because the numbers are getting bigger. Like, wow, look at me go. My net worth is increasing. Like my real estate is increasing in price. However, when you factor in inflation, frequently you're actually just treading water, in some cases even sinking. And when you compare to the best store of value we've ever had, the best form of money we've ever had, you're losing money rapidly. That was the huge like unlock for me is I'm getting a 99.9% loss. Like, wait, I thought I had made so much money. But when you realize that Bitcoin is not an investment, it is a way to work less, to live the life that you want to live, to stop toiling, because now you can save in a form of money that stores value over time. It's the exact opposite of how the cost of living is always going up and housing is going up and everything, right? It's like everything is falling when denominated in Bitcoin. So the first point here is just that Bitcoin is money. And if you begin to price things at Bitcoin, it can change how you see things. So where this phrase, one Bitcoin is still one Bitcoin, is like a nod to the fact that Bitcoin is just money and you can price things in the best form of money, not just the one that the government happens to issue. Have you ever seen, Jack, the chart of how many sats will get you $1? Which is another interesting one.
So I haven't seen any specific chart. However, I'm like so maxi at the point where like I have the sats per dollar on my home screen on my iPhone. So yes, I have seen it, and I've seen that number.
It's like
I've seen that number go from four digits to 3 digits over the last few months. It's been very exciting. but also it's like, oh shoot, I need more.
Yeah. Like just I was looking at the last 5 years. Like in 2020, it was like almost 10,000 sats. 2023, it was 5,000 sats. Today, it's less than 1,000 sats that $1 will buy you. And so it's just another way of looking at the price of Bitcoin or in the volatility. And, so Jack, how do you view volatility though? Like, I know that you would taking some notes here. You want to chime in?
Yeah, I mean, volatility is tough because volatility often is a like reflex or reaction of just time and place in a moment, right? Like it's hard to define what volatility is because you need to create clear parameters of a period of time. So over the course of a week or over the course of a month, year, 5 years, 10 years, right? So volatility from my perspective is kind of like instability. When I hear volatility, I think, okay, that's a volatile situation. It could blow up at any moment. It could, be a disaster. Something could, quote unquote break. And what's interesting about Bitcoin is I always hear Bitcoin's too volatile. And I always hear that why would I put my money in something that can, drop 50% in a day, which it has. And I've lived through that experience. I remember, sitting at home back in March of 2020 and like Bitcoin dropped to like, what was it like? Didn't Bitcoin drop to like 7K back in 2020?
I think so.
Something crazy, maybe even 3K. I don't know. But so I remember like, I remember that. And I was just like, all right, it's over. Not Bitcoin, but just the world at that time. And that's what's interesting on going back to volatility, because there are so many like external dynamics that can go into the day-to-day price, whether it is something like a pandemic or a war or a major exchange gets hacked. You hear all these stories. But I always go back to reminding myself, like, markets are irrational, humans are irrational, ipso facto, those are the same thing. And you're, kind of trying to price a monetary revolution in real time. One of the things that you talked about, Jason, that, describing like what Bitcoin is and you kept saying Bitcoin is money, right? And then you kind of, if you take that a step further, you start to ask, okay, what is money? And it's something that we just generally accept as valuable form of exchange. Like, it doesn't have to be the US dollars. Like, if you go to Mexico and you pay for something in pesos, then you don't think of that as any different, right? You think of that as normal. But when you go to a merchant or some online shop and you ask to pay in Bitcoin, they look at you like you have 5 heads. So it's just like it's a bit of a change of perspective. And that's what Bitcoin does. It changes your perspective. You take a new view on basically everything. I mean, going back to what I mean when I say stable versus unstable, is like when I think about Bitcoin, I think about that central thesis. And how I view the central thesis is 21 million supply cap, decentralized, and I can hold my own keys, right? No intermediary third party. And those are kind of the three like pillars of the Bitcoin thesis and foundation that actually make me feel that it is not volatile at all, because I can confirm and verify that those things are accurate and true at any given moment on my own volition. Whereas when you think of the fiat system and US dollars, things can change on a dime. We saw it in 2020, we saw it back in 2008, and an image that has stuck with me throughout a majority of my life was when I was probably in middle school, learning about World War or the events leading up to World War II and post World War I, Weimar Germany, and just seeing like pictures in the textbook of people wheelbarrowing dollars or the whatever the currency they use. I don't.
Yeah, they're burning it to keep warm.
Exactly, like literal toilet paper, right? And like just seeing what inflation can do to a society. And there are countless stories when you study the history of money about that. But like that image of just seeing somebody with a wheelbarrow of cash on my textbook, like that was just like tattooed in my brain. I see that like all the time. And that always made me understand that, yeah, inflation's bad. And then I learn about this Bitcoin thing and I'm like, okay, inflation's bad. Bitcoin is like inflation. Some people call it inflation resistant. Some people call it an inflation hedge. It's just deflationary. It's the opposite. It's an inverse. And that kind of started the wheels turning of me saying, okay, like inflation's bad. This thing's the opposite. So it's probably good. And then you learn more and more and you go down the rabbit hole, but that's for another topic for another day. But so that's kind of the thing that I continuously go back and forth on, of whenever there's something in the news that causes the Bitcoin price to drop. It's a little ironic that, you know, we're recording this today as the markets have been pretty volatile this week. And I just say, has the central thesis changed? And if the answer is yes, then I can start to have a conversation. But in the last 7 or 8 years that I've been following, studying, and researching Bitcoin, that has not changed. So, you know, my initial thought when Bitcoin dropped to 3K back in 2020 was, my God, it's over. But then I pause, take a breath. I'm like, wait, has anything fundamentally changed for this thing? And the answer consistently and perpetually, I hope, is no, it hasn't. And that is what makes Bitcoin not volatile. It's what makes you see the inverse of Bitcoin isn't getting more expensive in terms of the dollar. It's actually staying constant. It's the dollar that's losing its value against Bitcoin. As long as that holds true, I remain bullish. Like, I don't know what else I can say to that matter other than I think Bitcoin's going to continue to spread to where people understand this value proposition, and it'll continue to infiltrate and absorb not only these markets, but also the culture. And with that, you get increased demand. And because of the supply will be held constant at 21 million, then that's where you get like the number go up marketing play. But overall, it's just one Bitcoin equals one Bitcoin because there will only ever be 21 million. So how does that work for defining volatility and the irrationality of markets, Jason?
Well, what I really took from that is how you were able to distill something that is frankly quite complex down to 3 bullet points, which is that it has a fixed supply, that it is decentralized, and you can take self-custody, right? It's fixed supply. That's the magic sauce of Bitcoin, is that it can't be infinitely inflated by an elite group of people going into a back room and devaluing and debasing your currency overnight.
Yes, 100%. But it's also the self-custody is really important too, because one of the other little tidbits of a personal story that made me just have a bit of a disdain for banks. I remember I was really young. I think I was in 5th grade, and I got a check for my birthday from my parents, and it was like I'd saved up enough, dollars to open a bank account in our local credit union. So here I am walking into our credit union, and I'm like, I would like to open a checking account, please. And they rejected me. They didn't let me open a bank account. And I remember like turning to my mom and being like, what? Like, I'm trying to give them money, right? Like why can't I have a bank account? And that stuck with me for a while, because then, you get into to 2008, and you start to learn more about what the banks actually did to crash the economy, and all the Big Short and that whole fiasco. When I understood the idea of a decentralized peer-to-peer, uh, you know, money system, I was like, oh, I can just get dollars without anyone's permission, without the bank being like, yeah, you're approved. I don't know. That just never sat right with me.
And not only do you have self custody of your Bitcoin, but you have the actual money. The bank doesn't, because of fractional reserve banking, the bank doesn't actually have your money.
Well, that's what got me angry as I started to learn more about Bitcoin. Like when I got older, I was like, wait, they don't even hold the money and they wouldn't let me open an account? Like what?
Yeah.
So
Yeah.
I again, like I've always been that kind of type A personality of like I want control, and that takes a lot of practice to understand that there are only so many things you can control. But what's beautiful about Bitcoin, and I like to use the analogy of Bitcoin being a fire extinguisher, is like Bitcoin allows you to take control of something that previously it was very difficult to do. And that's the innovation. Yes, there is the decentralized peer-to-peer money aspect of it, but it's also that self-sovereignty that so many people say they want to control and they want to take control of their situation, but they don't actually do it. And Bitcoin's a relatively easy way to do that. And then you see your net worth and your purchasing power increase over time because it instills this type of discipline that that a lot of our fiat systems don't.
My most recent banking story, I became so grateful for Bitcoin. For, let's just put it this way, I became so grateful for a form of money that I could have control over without trusting that a third party would not screw me over. In my case, I tried to wire some money for one of my houses. We're doing a remodel, and Bank of America thought it was fraud, which I'm grateful that they're, making sure that there's, that I'm not getting scammed, of course. But it was such an absolute nightmare to just get control again over, because I had all my banks there, my bank accounts with them, and it took almost 4 hours, and they required me to go in person, and I was just like, oh my gosh, what if I was overseas? What if I was traveling? What if I couldn't drop all my meetings today? What if I literally can't make payroll? I can't do anything if I don't have access to my money. And the ability to know that it's just like my shoulders relax. Like I just feel this like deep peace when I go, okay, the price when denominated in fiat can go up, it can go down, whatever it is. But at the end of the day, can Bitcoin credibly enforce its fixed supply? Is it decentralized? Do I have self-custody? I'm good.
Well said, because I mean, going back, like that's why I love the fire extinguisher analogy so much. I actually kind of coined that one. If you remember the CrowdStrike outage that happened earlier this year, I thought that was going to be the moment of hyper Bitcoinization. I thought that was when everybody was going to be like, I need to take control, because I remember I was working for my fiat job at that time, and I didn't get paid that week, and I was in a very uncomfortable spot because I was like, I shouldn't be working if they're not going to pay me. Like that's the contract, right? So I was actually fortunate that part of my paycheck did go through because of Strike's like Bitcoin payment, but I don't know if I don't think that was actually due to the Bitcoin network. That was just because they work on a smaller ACH or newer ACH than the others. But it was still kind of funny that I was like, hey, I get paid in Bitcoin, so I got paid today, a part of my paycheck today. All that to say that unfortunately that was not a moment of hyper Bitcoinization. We're still battling through that, but it definitely woke up some people. But it's a fire extinguisher, right? Like you see people say that they want to put 1, 3, 15% of their portfolio in it because it's a way to have an escape valve, or to put out a fire if you need to make payroll, or if you need to have quick access to liquidity that legacy systems just don't provide.
Another, like you mentioned, it's there's 24/7 liquidity, right? The banks close on Labor Day. The banks close on holidays. Bitcoin 24/7, all day every day. Like imagine if real estate was liquid. Well, the price of real estate would probably plummet the day war was announced, right? Like it's not, it doesn't have that access to liquidity. It's taken me like 2 years basically just to be able to offload my rental properties.
Yeah, I mean, I have stories with buddies that I went to college with where we would be sitting on the couch late night, after like a night of drinking and stuff like that, and we'd look at the Bitcoin price, and it'd be, going back to volatility, it'd be in a dip, and we'd just buy at like 2 a.m. on a random ass night of the week. And it's funny looking back at some of those purchases because now, those have 5x'd, is like it's crazy.
Okay, so the next, can we jump into logarithmic charts?
Yeah, and let me tee you up here for this one because I am very anti-chart. I don't like looking at charts. I think they just add complexity for me when, again, I'm pretty simple. It's like those three things, and then how are the vibes? And if the vibes are good, then I'm like bullish, and vibes are always good. But I understand that there's a place for charts and for actual like deep rooted analysis. So I'm very much looking forward to this part of it because I'm hoping to learn something in not just looking at like a zoomed out chart, because that's typically the chart that I refer to people whenever they're like, oh my God, look at Bitcoin, or look at, this altcoin versus Bitcoin chart. And I'm like, yo, like zoom out 5 years, zoom out 15 years.
So that's what I want to go over. When you look at charts, are you looking at a regular scale or a log chart?
Yeah, just regular. Very surface level. I am as like nascent as it comes when it referring to like any type of technical analysis. I mean, I took a few finance classes in college, but it's never been my forte. I've never been a number crunching guy. I mean, there's different analytics that I like to look at. I'm not a total vibes guy, but maybe I can superimpose it in the right here in the next or in the edited version of this. But there's a meme that I send to my brother all the time when we're talking about fantasy baseball, because he's very stats driven and I'm very vibes driven. So I'll share the meme. You'll see it right here. It's like silence, data driven decision maker, a vibes guy is talking. And that is my approach, for better or worse.
Okay. Jack, this is really going to be helpful for you, I hope, because the log chart really was a big unlock for me. Okay, so James Lavish sent out a really great email this week that I want to heavily reference, because I think he did a really, really good job of breaking down the importance between a regular chart and how in a lot of cases it's not that helpful versus a log chart, which helps you zoom out and take perspective and see it all in perspective. So zooming out for a second before we get into charts. Just about every major technological revolution, whether it's the internet and e-commerce, digital money like Bitcoin, AI, it follows a predictable and it's sometimes painful market pattern of boom, bust, disbelief, and then dominance. And it's known as an adoption curve or an S-curve. Disruptive technologies do not tend to grow linearly. You've got the innovators, the true believers, and then early adopters. Then you got organic traction accelerating, and then mass adoption, and finally the last believers or true skeptics. And it can be volatile at times. And I want to share my screen. This is the screen share part. And we're going to talk about Amazon. We're going to reference Amazon here for a second. Here we are, screen share. Let me know if you can see that. Okay. $18.99. After surging to $113 in the dot-com boom of late 1999, Amazon collapsed to $5. 95% drawdown. Okay? And prices were swinging wildly, not necessarily because it's a bad company, it's a bad asset, the asset is broken, but because the world had not caught up yet to this new thing called the internet and e-commerce. And the same adoption phase volatility has hit almost every other exponential technology, like electricity, automobiles, the internet, and Bitcoin. We've seen 4 drawdowns of 80+%, and yet Bitcoin is still the best performing asset of the last 15 years. So volatility is not a sign of failure. It's just the natural result of what James calls exponential potential crashing into linear expectations. And it's really only obvious to those who are consistently zoomed out. and it's a necessary byproduct of exponential potential. So the problem here is that linear price charts create challenges when analyzing assets that compound. So a $20 move near $200, which is 10%, visually towers over a $2 move near $20, which is also 10%. So the mathematical significance is identical, but the result is an optical illusion. The more successful an asset becomes, the more its recent price action dwarfs everything that came before it. I'll show you the next chart. Amazon at regular scale. Look at what's fascinating. If you look at the bottom left corner here, look at 1999, 95% drop. Can you see it?
It's a blip.
It's like
it's a blip.
The last thing I would ever recognize on this chart.
I mean, yeah, just there's that. I would imagine that's a 2020 drop and then quick recovery, but on the right. But yeah, when you go back to the early days of Bezos and Amazon, that just looks like a gradually then suddenly.
Yes. So the dot-com surge and the collapse of 99 looks like a massive failure in the first chart, right? It's up and then way down. But then when you go to the long-term picture, it's like, tiny little blip. So here's gold at a regular scale. Here's Bitcoin at a regular scale. What's interesting, though, is that the early cycles that defined Bitcoin's adoption, 2011, 2013, 2017, almost disappear into barely little ripples when the most recent price overwhelms the frame, which is basically scale bias, right? Like you look at this chart and it barely even is, showing. Were you going to say something?
Well, just to kind of further that point there, it's funny because a lot of people, and there's been a lot of discourse during this bull cycle about how, these new all-time highs are boring, and people are kind of just scoffing at $115,000 Bitcoin or $120,000 Bitcoin. But to what you were saying, that's a $5,000 price movement. So it's only a few percentage points, but that's that bias, right? Of like, oh, we're not 100xing in a day. No, but you're going up that in that value, which increases the market cap of Bitcoin by an insane amount. So that's just another way to think of it.
Yeah. So the linear price chart shows absolute dollars rather than proportional change, which is the huge unlock for log charts, right? So the regular scale, it exaggerates the drama of maturity and it trivializes the effects of early compounding. Jack, do you think we're still early?
I'm going to say we're still early until I'm like, we're always early.
I know.
See, but actually we are always, sorry, I think I got a little loud there. We are always early because it's just a better way to save. Over time, your purchasing power will increase no matter how expensive it is. And you can buy a fraction of a Bitcoin. You could buy just, 10,000 Satoshis for $20 or whatever it is. And that will be worth more in 5-10 years from now than it is today.
Yes, 100%. So I agree. A 60% drawdown, going back to this, let's see. Let's go to Amazon. Okay. A 60% drawdown early in Amazon's life and a 60% drawdown decades later are identical in risk terms, but one is a tiny wiggle while the other one is a canyon on a linear, regular chart, okay? Investors looking at the picture, not math, conclude the later event is categorically worse, and they make it easy to believe that nothing happened for years and then everything happened at once. In other words, gradually then suddenly, which is a great storyline for short sellers and skeptics. So what's the solution? Linear charts are an optical illusion for compounding assets and are the corrective lens. I love going to linear charts and looking because it just gives this zoomed out perspective. So Amazon, now look at this chart, the log version, it shows 1999. It shows the drop, right? But it shows in perspective. It's just generally up and to the right. So a move from $10 to $20, which is a 100% gain, takes up the same vertical distance as a move from $1,000 to $2,000, which is also 100%. And likewise, 50% drawdown is the same vertical drop, whether it happens at $20 or $200,000. So there's gold. This is gold on a log chart. That title's wrong. And then here's Bitcoin on a log chart. Okay. And it's not that linear charts can be useful if you're like a day trader or whatever. But when we talk about accepting a form of money that stores value over time and saving in a form of money that stores value over time, I think the log chart is so much more helpful because it shows in context the adoption of new technology in the context of long-term price action, and it contextualizes it. Now, here's another mental unlock. Here's another one, which is log, also known as the power law. It takes a logarithmic chart of the logarithmic chart, and the red line is the log. That's the power law. So it literally just turns it into just a straight line. So if you go, is Bitcoin too volatile? Well, on a log, it's just like, it's a straight line. There's no volatility at all, right? It's just always up and to the right. So basically what you see here is the full history of Bitcoin and how it has tightly followed this predictable curve, and how the price has steadily climbed along this path for the last 15 years. Now, I'm going to stop sharing my screen. What is the price kind of a reflection of? The power law thesis is that it's actually network adoption, and price is following network adoption. And so if you say, well, macro event this, macro event that, what some country did or did not do, well, ultimately, adoption is increasing each and every day. Knowledge is increasing. People understand the difference between crypto and Bitcoin. People understand the difference between a truly decentralized, insert all the many, many things that make Bitcoin so unique and the properties that make it so incredible and unique. And it increases adoption. And I believe adoption will continue, right? And that price will follow adoption. And James believes, based on the chart, that we will likely see, I don't really want to make any price predictions, but he says between $250,000 to $1 million sometime between now and early 2030. Nobody knows when that is. Like, the model doesn't predict perfectly, what Bitcoin will do next week or next quarter. But the general roadmap of overall, it's always up and to the right. I think that the log chart can be helpful.
Yeah.
What are your thoughts?
Yeah, I mean, I definitely get what you're saying, especially for somebody who's getting introduced to Bitcoin and why it's valuable, right? Because to have that inverted perspective of getting cheaper, the dollar losing value against Bitcoin versus Bitcoin getting more expensive against the dollar, that takes time. So it's like, okay, let's get you to understand what you're actually thinking about, saving in or adopting, and then from there you can it'll just happen through osmosis. And I think that's, to your point, like, at the end of the day, adoption drives all. It's a very Gen Z, kind of framing here, but like that's vibes. That is vibes. And there's been kind of a recognition of that across the markets. You see it with these treasury companies who are, more or less leveraged Bitcoin plays, and their business model is just to acquire more Bitcoin because they're looking at the same charts that you just shared, and they're looking at the adoption and the interest of people who want to learn more and want to participate and want to have a piece of a fixed supply pie. Fixed supply pie. I like that. And they're looking at that and they're saying, we want to acquire as much as possible. We're going to take the, fiat dollars that in our point of view are losing value and buy something that mathematically will increase in value at a faster pace than anybody else. And that's the business model. And then other people are like, okay, let me hop aboard that train. And then the stock goes boom and you see it. And there's, a lot of people who are calling out some of the potential volatility that could be in our future because of these strategies. But in the short term, it's working. In the short term, it's volatile in the right direction, upward in the right direction. But I think that's a really good way to start to get somebody on the path of understanding adoption curves, innovative technology, emerging technologies, and how it frames it against some of the things that we're more familiar with, whether it's Amazon, email, the internet, whatever it may be. So that's really cool. And I think the other chart that I like to look at, and I wonder if you're able to pull it up real quick, is just like there's the, Bitcoin price with the dollar staying flat, and then there's just Bitcoin actually staying flat and the dollar going down. And that's another chart that I like to look at, even if it's, kind of not as, it might not be as like scientific. It's more just a mental model, but that's another one where it helps see that inversion visually versus just like talking about it. And people like charts and graphs because for myself included, it makes me feel smart and it makes me feel like I have evidence to back up my claims. But sometimes that evidence is just vibes.
Well, it goes back to the real estate guy when I said real estate is going down in price when denominated in Bitcoin, and he was like, "No, it's not." I was like, I mean, I could show you a visual if you want, if that helps. Like, I don't know what to tell you. This isn't an opinion of mine.
Right.
Do you feel like, Jack, that Bitcoin is still an 80 vol asset? You think we're still going to be dropping 80%?
I mean, yeah, maybe, but it could also go up 100. I mean, at the end of the day, like to that price prediction, and I'm personally not a price prediction guy. I don't like making price predictions. I don't listen to really anybody who makes a price prediction because that is just, that to me, like you don't actually, nobody knows what the sun could explode tomorrow.
Everything is probability. All of life is probability.
Here's the thing. Could Bitcoin, to James Lavish's opinion, go up to $1 million in 2028? Yeah. Then could it drop down to $350,000? I mean, that'd be what, a 65, 70% drop? And we're sitting here at 115K as of recording Friday, August 1st, 2025. Is Bitcoin dead if it's at $325 or $350,000? So that, going back to like the scale and the kind of, proportion or I forget I think that was the word you used, proportion of drops. Like it doesn't, yeah. But at the end of the day, but also if you go back 5 years ago, an $100 change in the price was a huge shift. Now we're thinking in terms of thousands and even thousands. Ultimately, hopefully, to $1 million a coin at some point in the future. So yeah, I wouldn't put it out there. I mean, I know some people think that with all the institutional capital coming in, that's where the volatility starts to flatten. And that's where like maybe we won't see those crazy X or 1000x days or weeks, but we'll just see a consistent 10, 15, 20 compounding percentage increase over, a few months, which I mean, that works too. I don't care. Because at the end of the day, like, you just got to stay humble, stack sats, and hopefully work on something that you love and provide value to the world. So that's kind of my perspective on it. And I think that that's where Bitcoin gets really philosophical and spiritual in a sense, because you start to not think about the price every single day and you don't necessarily view it as an investment. And that takes a long time to understand. It also takes seeing your stack grow and seeing that you're actually like getting rewarded the value that you put in for you're getting rewarded in value for the effort that you put in. So that's another piece of it too. So a lot of people, when the price is moving, people will reach out to me and like, I mean, listen, we're at all-time high in prices. We're also at all-time high in hash rate, and that's pretty freaking cool. And that never gets headlines. So that's just other pieces of the network that are just as important to that central thesis, but it's not the the marketing employee that gets all the clicks. So it is what it is. It's just part of it's just
number go up is a great marketing engine for Bitcoin,
for sure.
All right. I don't think I have anything else. Well, actually, I want to say this. If you're listening to this, we want to hear from you. Like I'm a regular guy. Like whoever's listening to this, a lot of you folks are probably going to be way smarter than me. What am I missing here? What are we not covering here? What do you guys want to hear from us on? I will say this on the volatility thing, on drawdown specifically. I would have to agree that it's probably not an 80% vol asset anymore. with institutions. I think 30% is extremely realistic. I think like 50 to 70% is probably also realistic. But to your point, it's like for like 150 or so right now, we go up, we come back down to 300. Well, it's quite a bit more than where we're at today. So again, just you got to look at the log chart. You got to zoom out. You got to look at things in perspective, and just remember to stay humble and stack sats.
Yeah, couldn't say it better myself. And for those, like you said, we love the feedback. We want more feedback. I think, this is a different approach to a lot of the episodes we've been putting out. So if this is a positive way of us providing some of that experience and knowledge, then I'm happy to put out more content like this. And additionally, for people who are looking to learn more, then find your local Bitcoin meetup. Just go on meetup.com, search for Bitcoin. I'm sure there's something in your area. That's how I initially got introduced to the Bitcoin community, just going to the meetups in Chicago and then ultimately in Austin, Texas and Nashville, Tennessee, and now being an organizer myself with Bitcoin Park. So these conversations and people wanting to share this knowledge is what I think is so special about, yes, Bitcoin Park and also just the Bitcoin community as a whole and the grassroots movement. So look up your local meetup, go in, say hi, find the organizer, introduce yourself, and ask all the questions in the world, because there's no such thing as a dumb question. They will likely refer you to a variety of resources. They'll likely, hopefully, give you good recommendations on Bitcoin only resources. But at the end of the day, you can always come back to this podcast as a resource as well to hopefully find that signal.
Well said. All right. Thanks, guys, for listening. See you later, Jack.
Adios.